Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Don, how are you? How are your XRP positions? How's the ball posting going?
I mean, it's all right. It's all right. I mean, ETH's gone really well.
Mm-hmm.
XRP's gone quite well. Cannot complain. Life's good.
But our hyperliquid positions are gigaprinting realistically,
Oh,
right? Like
of course, of
everything
course.
else is a footnote compared to the P&L on those.
Yeah, everyone prints or is printing on Hyperliquid, and us lazy boomers, we're not making any. Is what it is.
I don't know. I think we did a great job shilling it by making fun of ourselves for not trading on it like last Casual Friday. If that didn't convince you, nothing will at this point.
Yeah, I
It is
mean,
interesting though, right?
yeah, it is. I mean, just generally, I like it when there's new things that are actually decent in crypto, right? And
Yes.
I think this is basically the theme of the last month, where there's been a massive rotation from useless garbage to actual useful stuff. We've seen, like in the last couple of weeks, DeFi make a comeback of sorts. We've seen memes heavily underperform. Just generally, like it's been a rotation in the altcoin sector from basically stuff that is inherently worthless to stuff that might have some worth in the future at some point. Which I like to see. I like makes me more bullish on the space generally when we're not just hyper gambling, but people are actually betting on stuff that they think is going to make a difference. Even if it doesn't make a difference, even if it's useless at the end of the day, at least one has promised, the other one is just gambling. Makes me happy to see that promoted.
Yeah, I think that makes a lot of sense. It does make trading a bit more difficult, right? Because you have to, well, if you're trying to chase the optimal returns, if you will, which is a separate topic in itself, some rotation has been required. And rotating is always expensive because not only you have to get the timing right for the specific asset, but then also for the specific sector relative to other sectors. And as we've discussed, like over rotating in good market conditions is like one of the best ways to either just lose money or radically reduce the amount of money you make.
Yes.
It feels like the appropriate responses to a market that jumps around a lot is either you pledge loyalty to no one or nothing, and you start with a blank slate more or less every single day to see what's hot, what's trending, what has what has the relative increase in open interest, attention, breakout, and you just go full mercenary, which requires a huge time investment. Or I think you sit on the other end of the spectrum where you're like, look, my thesis is from N number of weeks or months ago. I'm sufficiently allocated to that thesis, even if it's not the one that sort of dominates the market in any given week. I still think like I'm generally right, and I'm happy to sit in those positions. Like I think those two approaches are reasonable and tenable and manageable. Whereas I think people in general land, as usual, in the middle, but in this case, the middle isn't Don's radical centrism, but it's rather the worst of both worlds, right? Where you
Yeah.
kind of have a thesis, but not really, and you just end up, instead of rotating to sectors, you chase them because you're not plugged in enough on lower time frames, and so you kind of just like bumble and fumble your way around the market as it moves. What's your, I don't know, philosophy on this? Do you agree? Do you think there's a better way to rotate? Do you think it's a bad idea in general because it's, I don't know, trying to, you know the expression perfection is the enemy of the good or something to that
Yes.
extent. I
Yes.
feel like with rotation games, a lot of it can be summarized with that.
Yeah, I mean, I agree generally. I think it really depends on what you're holding, though. So, like, if you're holding something that you just have inherent belief in that that's going to be around for like the next 3, 4, 5 cycles till the end of time, basically. So, if you're a Bitcoin believer and you're holding Bitcoin, for example, right, you don't really need to rotate that much because you're basically already in the asset that you want to hold. But if you're holding a meme coin, and I don't want to bash meme coins here, but that's kind of the game plan for everyone trading meme coins anyway, right? People just don't realize it. Like everyone that trades meme coins wants to sell them at some point for more money, right? Like that's the game plan, but they get caught up in the whole like back holding community. Um, but at the end of the day, if you're trading meme coin, you're trading it to either make more USD or more other useful crypto, right? So if you're in the meme coin game, you actually have to rotate a bunch because you're holding something inherently worthless, right? Like at least that's how it is to me. Like you're holding something that is going to go to zero. So if you're not aggressively rotating from that into something else, you're doing it wrong, right? Like in that sector, you have to chase strength. You actually have to cut positions. You have to like very actively manage, because like fundamentally wise, and I know that's a little bit of a meme thing to say in crypto, but it's true, because like there's really not that much there, and like cycle to cycle, you wouldn't really think that most of these coins are gonna kind of survive that, right? So that's like, if you're holding something like that, I think you need to be more active in rotating. If you're holding something that you actually deem like something useful, like I said, like Bitcoin or ETH, DeFi maybe, but I think that's like, you basically go from, if you're trading memes, you have to rotate a lot. If you're trading DeFi or like anything that is perceived as useful, you have to rotate a little bit less. And then you go to ETH and Bitcoin and whatever, and then you don't really have to rotate at all. But that also kind of includes that you just make more, like you have more volatility trading memes than you have trading DeFi, even though that's not been true in the last 2 weeks, but just generally. And then you have like when you go to Bitcoin and ETH, for example, you have very little volatility, right? So basically, the shittier of an asset you kind of pick, the more you have to actively manage, and the more you have to kind of chase what's hot, because the moment something's like a narrative dies, your coins die with it if you're holding shitty coins. Whereas like the ETH, for example, ETH's been narratively dead, right? Like for the last year or two, where everyone's been shit talking ETH, but ETH's still around and ETH's still doing quite well. But if you had an asset that was as shitty as ETH that wasn't ETH, your balance would be zero if you held that for that year. So it depends, I think. But just generally, I think people over rotate usually day to day, because they just chase whatever is hot on that day, and under rotate just on the larger time frames when like when these narratives come and go,
Like
right? As in
quarterly,
like
monthly
yeah,
type
yeah.
of thing. Okay.
Like for example, it was very like the moment the boomer coins moved, right? It was very, I think, very obvious that the narrative had shifted from, okay, we're trading aggressive memes, to okay, we're looking for stuff that one, people know, and two, that is perceived value, right? And that's been the narrative for like what, like 2 or 3 months now, right? I don't know, I don't remember when exactly the first boomer coins pumped. Maybe it was just a month, but like that's the narrative right now. That's the meta that we're playing right now. And I think for those people are too slow, because they're kind of like they rotate in their own sectors, right? They're like, okay, I'm a meme coin trader, I have to trade memes, and then they're stuck in it and they rotate, like they chase one meme coin after the other, which is a little bit silly, because I mean it costs you basically every time you do it. Whereas what you need to do is you need to rotate when like big events happen, like that one, for example, or generally like when a sector becomes hot, you usually have a little bit of time to go after that one. So people do both. They rotate too little and rotate too much, I think, which is literally like it's a centrist thing to say as usual.
Classic. Yeah.
But I think low time frame, like people get too influenced by low time frame price action, like the daily, and then high time frame they don't really see the big shifts, even when they're obvious, and that's something that is really important in crypto.
Yeah. I mean, that's a useful framework, right? So it's kind of rotation as a spectrum, essentially, depending on what you're holding. And then also distinguishing between intra-sector rotation, like from meme to meme, and then inter-sector rotation, like from memes to DeFi to, boomer coins and whatever else. I think that's a useful framework. It does put you in stark opposition, though, Don, to Murad. And his entire thesis is that money is made in sort of waiting, not trading, and kind of essentially once you've picked, any type of rotation is net negative, and so on and so forth. I think there is a kernel of truth in that, at least if you've conveniently managed to pick correctly.
Yeah. I mean, that's the caveat, right?
It's just a small footnote, but I think the bigger issue is like the sector you've chosen refreshes itself way too often to be able to, I think, confidently hold multi-month or even multi-year positions, right? Like if you take the BTC ETH the golden ticket trade or the institutional trade or whatever else, they're really, that watch list doesn't really get updated all too often, right? It's pretty much just BTC and ETH. Whereas if you want to have exposure to that sector, there's not that much you need to do within it, as you mentioned, to have exposure and still be exposed to the upside for that specific sector. But let's say you're in meme coins and you have a larger thesis for memes. You could actually be right about memes, but be wrong in terms of P&L if the choice of meme coins is wrong. Like, it's very difficult to make that mistake with BTC and ETH because it doesn't, like, the list of assets within that sector doesn't really change. Whereas with memes, you can be right directionally about like the trend and gamification and financial nihilism or whatever else. But like, you pick the wrong memes and your entire thesis plays out. You've got fuck all to show for it. So I think that's the first problem, is that you need to have an understanding of like how often your sector itself kind of refreshes itself and adds new assets and changes, what's hot and what's the priority, and also the impact of that change on those coins, because like there isn't an infinite amount of liquidity to lift everything at the same time, and we've seen effects of that in the last couple of weeks. But then also, if you take the hold and do nothing and trading is, waiting and et cetera type of approach to literally, then you go through the altcoin cycle, that's happened an infinite number of times where you just never sell, right? Like, that amount of mental illness gets you the insane unrealized P&L by holding through absurd valuations, absurd percentage moves, markups, vertical accumulation, parabola, whatever you want to call it. But then if you keep believing, at some point it'll just come back on you, assuming that markets haven't changed fundamentally. And I don't think they have, right? Like, this is another topic we've discussed at length. Like, there's a lot of arguments made that meme coins are just like materially different from every other altcoin cycle that's happened up to this point. I just think that's a very incredible, in the traditional sense, claim to make. And realistically, the way this often plays out is whatever the hot thing is, it makes a group of people rich. More people pile in thinking we just need to hold this and look at the results the first group got. And then you essentially round trip and there is no new paradigm, just a lot of hurt feelings and unrealized P&L. So, I mean, it's just like anything, right? The trade-off between having enough mental illness to hold through insane stuff while also being able to like flip a switch and sell, that's really hard. The sector rotation, as you mentioned, is also like pretty tricky. Distinguishing not only which sector is going to pump, but then especially if you're trading like meme coins or things where there's a rich number of instruments, you need to pick which assets within that sector you want to be allocated to, right? So there's inter-sector rotation from sector to sector, intra-sector rotation, like coins within that sector, and then the idea of holding versus trading and managing all that unrealized P&L if you get there in the first place. So basically, this shit is hard, and I've got nothing else to say. What do you think?
Yeah, I mean, I 100% agree with you. Like, I generally, I don't think memes are gonna disappear. Like, and this is what people kind of like, they always get it wrong. Like, whenever I talk about memes, they're like, Don hates memes, and I'm like, I don't necessarily hate them. I hate the way the game is played on that front, with like basically like the attention economy is very, very important for memes, right? So as long as you have influencers talking about a meme or like a meme coin, it's gonna do somewhat okay. The moment they stop talking about it, there's a good chance it just disappears, right? So as a normal person, you are reliant on your influencer of choice to keep your coin afloat. If they stop talking, you stop making money. And this is something that I just fundamentally dislike a lot. And that doesn't have to stay the same, right? For example, Dogecoin escaped that, right? Like, your favorite influencer doesn't have that much of an influence on Dogecoin because Dogecoin's been around long enough. It's kind of a household name. And there's a few like that, I think, at this point in time. And those, I think, is probably going to stick around. Like, the moment you get to that point, the coin doesn't at least just go straight up to zero. But to get to that point, a lot of grifting, a lot of like shady shit has to be done, basically, for most of these. And then I generally think, like, in the future, you're going to have like meme coins that are traded a bunch. But like you said, it's going to be really, really hard to figure out which ones those are going to be. And it's really easy to figure out like the big coins that are gonna still be around in a couple of
Yes.
years, right? Like everyone agrees that Bitcoin is gonna be around. Like as long as crypto is gonna be around in 10 years, Bitcoin is gonna be around in 10 years. And almost everyone agrees that ETH is gonna be around, right? In 10 years. I'm not even like I'm an ETH bull right now. I like just generally, but I think that's already like quite an aggressive kind of like call to make, that ETH's gonna be like significant in 10 years. But with Bitcoin, it's pretty obvious to me. And if you shorten the time frame and say like in 5 years, I think in 5 years, ETH's still going to be significant, right? Whereas I cannot really say that about anything else in the market. And then in the meme coin space, it's so much crazier than that,
It's
right?
like 5
Where it's
weeks.
like, yeah, you have like that the time frame where you can be certain that that thing is still going to be around is so much shorter.
Yes.
And people pretend like that's not the case, right? They're like, oh yeah, this is trading on a centralized exchange now, so it cannot disappear. And it does disappear slower, but an infinite bleed is some of the worst things that can happen to you as a holder, right? Like if something continues to bleed out, and I've seen this, and I mean we've seen this over the last cycles, how damaging that is to the holder base, right? Like when your coin just continues to bleed out.
It's crushing. Yeah,
Yeah,
absolutely.
and then people tend to be like, oh, I'm just gonna DCA because I mean I like this thing, and then it's like it's game over.
And it disincentivizes future buyers as well, because they'll then look at the chart and say, well, this piece of shit is like so weak relative to the rest of the market, and even if it pumps now, it's going to have so many bag holders at that point that I don't think it's appealing. Now, obviously, that logic doesn't always work, as we've seen with boomer coins, but boomer coins, you know, they went through years of this sideways money changing hands stuff, right? And so a lot of the float essentially has changed hands, whereas on that first initial bleed and then sideways, it's that kind of irrelevance move that makes it really tricky to buy in the short term. Like it actually takes a while, I think, for those types of impacts to unwind before you can start pumping them again. And I think this entire section, like, you know, that long fucking diatribe about you need to rotate intersector, intrasector, then even if you're right on memes, they get unseated by other memes, etc. Like, it sounds very convoluted and complicated, but if anything, I think it makes the point as to why BTC and ETH are just so appealing, because you don't need to like worry about that. If you're now, yes, of course, your returns are arguably going to be less. There's less volatility, which for short-term trading you don't want, but it kind of smoothens out your risk profile and removes a lot of the very difficult decision making, and you just have like a easier to express view that I think crypto is going up, and I think if crypto goes up and sticks around, these assets are also going to go up and stick around, and the probability of them being unseated by something new, hot, that has more attention span, more influences, is basically zero in BTC and ETH's case, right? I think there's like something really valuable to that. It is boring and it's not like super sexy, but compared to all the stuff you have to think about and the frequency with which you have to trade, rebalance, follow new trends, rely on third parties, etc., when trading other sectors, there is just something fundamentally quite nice and calming about the boomer coins, and especially like the so-called institutional coins, your BTC and ETHs. You just remove a lot of noise from your decision making, I feel like.
Yeah, and I mean, just generally, like I you can compare it to buying the S&P or buying singular stocks, where it's like the S&P's been like so easy, right? You've just had to buy it, and then it's gone up infinite for the last infinite years, basically. Whereas like a lot of stocks went to zero, and this is in the real world where stuff actually has a use case, and it's actual companies and actual like actual people behind it, not just some random dude that just spun up like a copy of like a copy of a copy of a copy of a coin. You know what I mean? Like even in the traditional world where you have a bunch of like extra info, like it's really hard to pick the right spot, like the right companies, the right like stocks to trade. And then most people are just trading the S&P, and I think this is pretty much the same thing in crypto, where like if you trade Bitcoin, for example, you make less, but you also don't have like it's so much easier, basically. And I think everyone kind of knows this, but they don't really realize how like because everyone on social media makes it look so easy to be right and so easy to have picked the right coins and the right narratives and whatever. But what you have to realize is that like when people are on Twitter and they tweet like 20 different narratives, 20 different coins, and then they retweet the ones that worked and just kind of forget about the ones that didn't. And then you're just sitting there wondering like why it doesn't really work for you.
Yes.
And
that's just one account, right? And then you follow hundreds and they're all doing the same thing. Like,
and everyone's winning, you know, like, and the thing is like, if you're an influencer, like the funny thing is like, it's easier to win, right? Like you can make yourself win just by tweeting enough about a project if it's small enough. So not only are people only gonna tweet about their wins, they're also gonna make their wins actually themselves, right? By getting their followers to buy coins that might have otherwise not won, and turning them into winners. So you have to realize that you're not in the same position, and it's not really necessary. Like not everything that you see on social media is actually true.
There's a lesson.
Yeah, and I think people need to internalize this, because I've seen a lot of people be very upset that they've been underperforming.
Yes.
And the reason for that is that it's like, it's not as easy as people make it out to be. And I think that way people get baited into trading very, very aggressive, very hard sectors like the meme coin sectors, for example, where you have to be dialed in, you have to be in the trenches.
Yeah, I completely agree. And also, like, that effect is compounded by the fact that when things are generally going up, I mean, people's baseline reluctance to share their losing trades and mistakes is generally very high, but it's even higher when everything's going up, because it's like doubly embarrassing to lose money when everything is green every other day, or pretty much every day, right? So then if you look at like the sample, you know, the average sample of what you're actually consuming, it's just like every account posting and retweeting curated winners, and then hundreds of accounts doing that, and at the same time they're not posting any of their losers. Like, you're being fed like utter slop in comparison to reality. And I think that point is worth emphasizing. But if we want to TLDR the whole rotation spiel, I think there's a decent framework here, which is to say that if you're trading more volatile sectors that are more attention driven and attention reliant, then you by definition have to rotate more frequently, because the top gainers and the projects with the most mindshare and the stuff that you actually want to be trading, and the best way to have exposure to that sector, will within that sector rotate frequently. The king gets unseated and something else comes along, and you just need to be on it, basically. And that's the price you pay for potentially higher returns and higher volatility. Whereas if you're trading, you know, your BTC, your ETHs, your, I guess your more Lindy stuff, your more institutional stuff, as always, there are trade-offs. The trade-off is that maybe in terms of raw multiples, you're not going to get those trench 10, 20, 50 X's in short periods of time. But at the same time, the volatility of your portfolio is like very smooth in comparison, and you don't need to be checking in every single day to see if there's like a new BTC or a new ETH, and you can generally just keep your exposure to that sector and think in terms of large timeframes and purely well, I guess price action and your exposure to the sector, as opposed to worrying within the sector whether you're holding the right coins, because there are only like 2 or 3 coins and they're not getting unseated anytime soon. I think that's helpful. Should we do some price action-y stuff? Because I think we've lost 99% of our audience at this point.
Yes.
Fantastic.
I mean, Bitcoin's at 100K, so...
Bitcoin's back at 100K, yeah. I want to ask you about your subtle bear post, Don.
Which one? I have many.
Which one? It's the 100K failed breakout, but now we're back above it. But basically that dip on the 9th of 10th of December, where I think this is like a very interesting bit of price action, because we had that fuck off wick, right? And you tweeted about that quite well. How I think it was the 10K level had a very similar type of setup.
Yeah.
So that wick was a decent wipeout, but interestingly enough, that was a BTC only wipeout. Altcoins just like didn't flinch at all. And that was then interpreted as a sign of relative strength. So the next couple of days, I mean, BTC went up for 2 or 3 days and recovered that wick, if you will. But altcoins got a ton of fresh positioning. Because that was almost seen as a green light that, oh my God, look, they're even immune to BTC wicks. This is like 2021, fucking send it. And when a lot of that leverage got added into altcoins, it then got washed out over a 2-day period. And then it seems like the tables, you know, the cards were reversed, essentially. For BTC, you had like 2 red days, which didn't really break much or go anywhere. But on altcoins, that was like a massacre during that period, because some of the pre-existing positioning and basically all the fresh positioning that was added as a result of the BTC post-wick recovery got completely wiped out. And so I think, at least on the 10th, the market looked a bit dodgy, because BTC is back below 100K. And then altcoins had just got massacred. At the time, and if you haven't, I'm going to plug my bloody fucking Telegram channel here, Don, so I'm sorry. Maybe I'll leave a link somewhere. But I'm just posting like longish form essays in Telegram. It's quite nice. At least for me, it helps to actually write stuff from time to time and use my brain. And at the time, my argument was that, this is kind of the first daily time frame sign of weakness on BTC. You should expect altcoin mean reversion and a lot of these wick refill type of stuff because, coins were down, like 20% in one day type of thing.
Yeah.
And then another 10 the next day. Those moves are generally illiquid and mean revert. But mean reversion aside, I was like, well, want BTC to close back above the range because, 100K spike, altcoin wipeout, sure, mean reversion, but like, let's clear this. And then the next day, the US session just pumped the living shit out of this thing, right? On the 11th, the classic. Yeah. I think I even mentioned that in my post. I'm like, listen, BTC TA at this point you're kind of a slave to Saylor's buying,
Literally, yeah.
Your levels will be in fuck all if he just decides to conjure up a few billion and just buy it again. And I think that dynamic, I don't know if he announced it, but I wouldn't be surprised if that was him to a decent extent.
I think it's generally understood that was him.
Yeah, and so that leaves us now. I don't even want to talk about the monthly and weekly timeframes at the moment because I don't think there's a ton to say. But the daily timeframe had this, red flag of sorts on this 100K wick and wipeout and back inside the range, but now we're firmly above 100K again. So what do you think, Don? Where does that leave us?
TA wise looks good, right? The problem is that, right now, especially around 100K, you can feel that a lot of people are kind of like waiting. And the only one that's really aggressively buying is Saylor, right?
Yeah, that's true.
Which is really odd, but that can continue for much longer than people think, right? Like, he's getting more money than you'd think, and he can push the market up more than you'd think. So, like, just generally, Bitcoin, as sad as it is from like a trading perspective, is more reliant on Saylor buying than on any TA, any like relative strength, weakness, whatever you can see, because it's just literally just like, does the guy show up to buy or does he not? And if he doesn't, lately, like every time he doesn't show up, the market like pulls back a little, and then he does show up, and the market goes back up. So like just generally on the Bitcoin front, it's really hard to say like where this is gonna go, just because he's so aggressive right now. Like anything near 100K, it just seems like it's being gobbled up by Saylor. And it's not like he's doing it because he's like, oh, it's never gonna go back to 100K. It's just because right now he's getting a lot of money, right? Like he has a lot of money to spend, basically. And whenever he has a lot of money to spend, he spends it. And so like
he's completely price insensitive. He doesn't give a shit. Like as soon as the cash hits, he's yeeting clips,
And he's like, oh, this is for the next 2 years, and he buys it in the next week. he's like, oh, we have like 9 billion or something to spend. We're gonna see if we can spend that over the next like whatever, like literally, I think like he said like a year or something. I don't really
what a
keep up with
legend.
it. And then he literally spent it in like a week.
Yeah, but we've all done that, right? It's like, oh, this is like a nice area, I'm gonna scale in and kind of work some orders, and then just yeet it full clip.
Yeah. I mean, he doesn't care. He's gonna buy as much as he can
at any price he can. Yeah,
at any price he can. And I see a lot of people be worried about it. The voices are getting louder that are worried about his like involvement. And I kind of see where they're coming from, because it's just like, even if you ignore everything else, like the whole liquidation bullshit, right? People kept talking about Saylor getting liquidated last bear market too, and I told them off. I was like, this is just so stupid. Like the way he structured it, he's not gonna get liquidated. The only thing that's really bad for him is if the market stays really shit for a long time, right? So he's not gonna get liquidated, but people are getting like, even if you like, besides that, if you completely take out price, like he's starting to own a lot of the Bitcoin supply, right? Like it's actually getting like significant percentages, which I think is not the best. You don't necessarily want to have like a US company just own like a large percent of the Bitcoin supply that's out there. I think that's generally not healthy. So if he continues doing this and gets more and more aggressive, and he goes from like 1 or 2% to like 5% of all the Bitcoin out there, like then starts getting like it's just a little bit, I don't know. I think that's fundamentally bearish. But what I am like, a lot of people are getting worried by just also like by how aggressive he's being, right? Like, because with his current average, which is like 60K, it's largely understood that he's kind of fine. Even if we hit a bear market, like he's not going to go underwater too much. But if he continues buying aggressively and the market doesn't go up, and then his average is 100K and the market is trading like barely above it, then it starts getting a little bit scary, right? Just because at that point, if Bitcoin has a proper bear market and the bear market continues for a little longer than normal, and this is something that we've seen in crypto a lot generally, where if you have someone and you know their pain point, right? And we've seen this in centralized exchanges where people have been hunted, right? Where you know, okay, they're going to be in trouble if the price goes there and there. It usually does. So I think at some point at the end of this cycle, if he doesn't kind of slow it down, this is going to be a discussion worth having, right? As in, like, the cycle is through, Bitcoin moves back down, whether that be from now, from 100, 150, 200K, right? And goes into another bear market. I think at that point, the discussion of, okay, is Saylor going to get liquidated, actually makes sense to talk about, because I think he's uniquely exposed this time around. But it's not really a thing that matters too much as long as prices are going up. And it's not going to matter much until prices are severely down, right? Like if you have a bear market and he bought the top with full size again, and then the prices are down 50, 60%, and they continue being down 50, 60% for like 1, 2, 3, 4, 5 years, then you can have that discussion. Until then, just like be happy that there's someone that's just buying this thing up and makes all the idiots in the market make money, right? Because you haven't really have had to be like particularly good at trading or particularly good at doing anything in the market. Especially this cycle, because it's all been sponsored by and bailed out by Saylor and the ETFs.
Which is amazing.
Like,
thank you.
Yeah. It's the first cycle that has not been like so aggressively predatory, where people just continuously get wrecked. It's basically like almost all risk taking has been rewarded, and I think that's why the last 3, 4, 5 days have played out the way they have, because people are like completely oblivious to the fact that they're trading something super risky on both the altcoin front and the Bitcoin front. And then we got the flash crash from 105 to like 90K, and we got the altcoins nuking 20, 30% just because people forget that there's actual risk. And I think Saylor is doing some of that by basically preventing bigger pullbacks from happening.
Yes.
And that's kind of where we're getting this price action from, which is kind of funny. And I think it's going to get more and more aggressive as we go up, just because people are going to be like taking risk a bunch because they think they're always going to get bailed out. But news alert, you will not. You have to be wise when you use leverage, and you have to be like actually using your brain. It's just, so far this cycle, it's not been the case. But the higher price goes, the more you actually have to trade properly, I think.
Yeah, we've kind of outsourced the risk taking to Saylor and the ETFs, if that makes sense. And then they sort of set up the sandbox, and we just go play with altcoins with too much leverage and then
Literally,
get wiped out. Like, I think the clearest indication of it were the two things that you mentioned. The first is that when BTC wicked and flash crashed, alts like didn't flinch, and in general people like didn't give a shit because no one's holding BTC. That's like not our job, right?
Yeah. I mean, Twitter was like completely chill. Like everyone was just like, oh shit, like that was a funny flash crash. Like everyone was like, whatever.
Yeah, like haha, lol. Whereas BTC goes down
much less
on the 9th and 10th, but altcoins go down with it. And then that was like, what, the biggest liquidation day since 2021 or something absurd. Now obviously
Hilarious,
that's in, like, you need to adjust for the just much larger sizes and volumes, etc., that are traded. But still, that's insane to think about, that like one of the biggest liquidation days in crypto history is like basically not visible on the Bitcoin daily time frame chart.
Yeah, insane.
Like that is
Insane.
absurd, right? I wonder if I go on Coinalyze, I'm not going to load it right now, but I wonder what they have a metric which basically looks at altcoin volume by dominance and altcoin open interest by dominance. Like it must be absurd at this point, right? Like no one trades and actually holds BTC, and everyone just leverages up on altcoins, and it's a very difficult game to play, I think. I mean, easy in certain points, especially if, like, look, it's not the most insane thing to set up a trade, which basically says when BTC dips and altcoins dip with it, you can just buy the altcoins because we're going to get BTC bailed out by Saylor and the ETFs, right? Like, that's not the most retarded thing you've heard. And you've heard a lot of retarded things.
I mean, it's really retarded, but it's been working.
It's been working, but at some point it'll stop working, right? Like, that bailout goes away, and that's when you get, like, colossally fucked. Because as you know, there's like an overconfidence in a win streak sizing up effect that is just like, the hit list of that effect on traders' P&Ls is insane. And you take a win or you try and get a new edge, it works. You take it again, it works. And you gradually start sizing up more and more as it keeps working. And then obviously the one time you size up like a lot for it, it doesn't work and you don't have systems in place and get wiped out. That's quite a common occurrence. And that wouldn't be too surprising on the altcoin front. But in the short term, like I think that's kind of the story of the market. Like you essentially have fully price insensitive buyers on BTC. Correlations are still generally intact. There's a ton of leverage in altcoins and a lot less leverage in BTC. So when BTC dips, altcoins wipe out disproportionately, but because of those same price insensitive buyers, BTC gets bid back up without a larger pullback, and so short-term mean reversion and entries on those altcoins are still attractive. And it doesn't, we have like 1 or 2 bloody days. We don't have 1 or 2 bloody weeks. I think if we didn't have the price insensitive BTC buyers, we would have had a ton of those much more prolonged downside moves in alts.
Yes.
But because the correlations are still generally lockstep, like you get a flush, but then, the BTC buyers are back and therefore altcoin buyers are back as well. I just think there's a lot of misinterpretation going on as that being sort of altcoin strength in and of itself, if that makes sense. I don't think that's entirely true. I think it's the fact that BTC gets bailed out, and so that's seen as a green light to pile on leverage and positioning into alts. I don't think it's like a massive passive bid in altcoins, and even if it were, I still think it's entirely contingent on a fast bounce back in BTC. Like you wouldn't see BTC going down, like properly down for 2-3 weeks in a row, and then altcoin just like green across the board. I don't think that's particularly likely. But that seems to be the story of the market at the moment.
Yeah, I mean, it's quite funny. I think it basically rewards behavior that is really, really risky, and it's making it feel safe because it keeps working.
Yes,
it's actually setting up like the biggest crash in a long, long time, but that only is going to happen like at the pico top. I think there's going to be one of the more aggressive crashes that we've had. It's just like until then, people are going to get trained to do the dumbest shit possible. And I think that's actually like, it's really good for like going parabolic. It makes it really easy to go parabolic because everyone kind of has the feeling that they're going to get bailed out. Which sets up really nice, right? For like something like a Bitcoin leg that is quite aggressive, or for just altcoins going into like alt season of sorts. Because everyone is just like, oh yeah, I mean, there's no risk. Like Saylor is always gonna bail us out, and I think this is getting more and more to the forefront of like the idiots and the smart people that I've talked with. Like a lot of them are kind of getting worried about the whole Saylor thing, which is really funny because then I think basically the idiots are probably gonna outperform the smart people by a lot. Because this is just so incentivized right now, and I could see the market kind of go parabolic from something like this, and then just the moment it doesn't work anymore, the moment you get a big crash, Saylor buys. He's probably gonna like at some point he's not gonna get more money to buy. He might spend his last little bit, and then the market crashes, and people are like, oh shit, and then it goes hard. I think. But I think that's still in the future.
Yeah.
Right now, I think he has enough money and enough interest flowing in to kind of sustain prices like this. And I think if that all plays out nicely, I mean, it's a little bit of a gamble, but if it all plays out nicely, we could go into full-blown parabolic movement again, like we did in 2017.
Nice.
Where like everything just went full parabolic because people are like at that point just chasing it, right? And then the underlying feeling, and this is only something that you get if the market doesn't pull back regularly, is that you're safe, right? If the market regularly goes down like 40% like it did in the past, people are like on their toes and
Yeah.
tend to kind of like reduce risk, like make sure that they don't get fucked. Because if a market goes down 40%, you're basically liquidated even if you use 2x leverage,
Yeah,
right?
totally.
Whereas if the market cannot go down those amounts because it's artificially of sorts bid up like that, people forget that risk exists, and then they go full ape, and then they lever up more and more and more. Because if your base case is okay, 40% pullbacks are normal, you cannot really go much higher than 2x leverage. If your base case is 10% pullbacks at the maximum, I mean, there's a little bit more room to go with the leverage slider, right? And I think that's going to lead to some funny like trading days ahead. I think we're heading into the like parabolic stages right now.
Also, parabolic Trav came back, so we're literally heading into the parabolic stages.
Yeah, I wonder if he's going to do the same thing he did in 2017.
Bro, that was such a... I felt like I fell into some sort of time hole, portal, whatever.
Literally.
Like, this is peak 2017 content, parabolic Trav, and then, oh my god,
XRP
stuff.
is pumping, parabolic Trav is back.
Dude, unbelievable.
Yeah.
Yeah, no, I think, listen, fundamentally, there's nothing more dangerous than feeling completely safe, right? And that's what a lot of it comes down to. And I think we were, to the tiny bits of credit that we love to give ourselves in between making fun of how shit we are at missing what's meta, I think that we were quite early to the whole, like, bailout narrative, if that makes sense.
Oh, yeah.
You know, the idea that we essentially segmented the market into price insensitive, always buying, don't care, BTC on the Saylor plus institutional front, and that is then seen as a green light to go do degenerate stuff in altcoins that in previous markets, if there weren't that segmentation, would have led to like 40% wipeouts by now. And I think the good trade has just been aligning yourself with that. I think this is something you speak to very well on this show generally. Like when you see crime, when you see fraud, when you see someone being like fully price insensitive and yeeting in, you know, the hero trade in your head might be, oh, well, I know this is bullshit, I'm going to step in and short. But the smart trade is to actually just line up with that person, ride their coattails while the music's playing, you know?
Yeah, I mean, let them do the crime.
Let them do the crime, yeah, exactly. So I think that's a decent view of the market right now. I don't have any strong TA stuff at the moment. I don't know if you do. I was eyeballing this 100k whatever thing, but then I legit think just even mentioned it that, you know, if Saylor buys, like, fuck your lines basically. And I think we're very much in if Saylor buys, fuck your lines territory still at the moment. The only other contextual thing is at least you feel less bad about a lot of altcoin positioning, especially if it was put on the last couple of days, because that leverage flush like was really, really big. And so the cost of holding those positions and so on and so forth has abated a little bit. And, you know, I'm looking at Velo right now on the large caps. Funding APR on these coins, at least on the large cap side, is pretty trivial. There was a lot of positioning washed out on that. On the top gainers, even then, like Aave 15%, you know, Link 11%, Aave 15%, Turbo and Sushi, they're all like barely double digits. So the most speculative guys got like completely wiped out. So there's that to speak to too. Do you want to talk about ETH?
Yeah, we can talk about ETH.
Let's talk about ETH USD first. I feel like you walked us through this trade really nicely on this show, if that makes sense. Like, you know, the triangle meme played out nicely. And then from that point, it was basically, 2.7 breakout. And then your argument at the time was it's really the 3K breakout or 2.9 that's going to be big. And I mean, it's pretty much gone up in a straight line since then, both on the daily and on the weekly. Like literally, if you bought any daily close above 3K, that's generally been a good trade. And it's not been one of these tricky ones that has repeatedly tested your invalidation or came close or done anything too scary. Even if you took the FUD version of the chart, which had the weekly mid-range, I don't know if you recall this from a couple of weeks ago,
Mhm.
That served you well by giving you a slight hiccup at 3.4 on the weekly, but then just broke through it on the daily and made its way to the range high. So even for short-term trading, kind of a tactical mid-term midpoint resistance that worked out. But in general, from a TA perspective, this is one of those hindsight larpy ones, right? Like reclaim the range low, go to the other side of the range. Thanks for playing. Paid group knew it first. It's like fucking textbook on ETH.
It is, yeah. I mean, it's so clean. Like the moment it reclaimed the range, it basically headed for the top of the range, which that's where we are right now,
Yes.
right?
You're
When
not going to FUD
you
the range high, are you, Don?
no, I mean
Okay,
it's
good.
tested too many times. Like I don't see the point.
What's the is it the high all the way back from 2021 on the weekly that you're using?
That's what I
3928 or some
have,
shit?
but I think you can also use the green candle before the breakdown, which is the same, like basically the same level.
Yeah.
Like that line goes through that tiny green candle before like everything imploded,
Yeah.
on the 20th of December. I think that cluster you can use as resistance. That's what we're kind of like struggling with right now. I just have the line because it looks more bullish, which supports my bias.
Yeah, that's
But
perfect.
yeah, I mean it looks quite good, on the USD front. And I generally, like, I looked at this and I was like, there is a possibility, that if we get a market crash, uh, that we test like 2.9K support again, and then you would have like an inverse head and shoulders setup, right? And I think that is still possible, but with like if Saylor wasn't in the market buying, I think that's kind of what we would get. Basically, everyone super excited about ETH breakout, and then you get a hiccup, and people are like, "Ah, shit! Like ETH's such a shit, like piece of shit." Basically, always disappoints, and then it slowly creeps up from 2.9 and actually starts breaking out for real. But given we have Saylor, and given we have like a bid on Bitcoin that just never stops, or at least hasn't stopped so far, it's kind of hard to think that we would go back there. So right now, my thesis is not that we're going there. I think it's possible, but it's very unlikely. And I just think like, hey, we've tested this resistance too many times. I'm gonna bet on a breakout. Um, and the breakout, I think, would take us towards like, I mean, a new all-time
The
high,
all-time high, surely.
obviously,
Yeah.
but then like 6, 7, maybe 8K,
Round
and
number
I'm
season, Don? Is that on the
yeah,
menu?
yeah, I think so. And
Okay.
I think I'm very cautious with calling like for 6 or 7K. I think given how big this consolidation is, like the weekly triangle, right? Like we had that meme triangle when we
Yeah.
at the bottom, right, that we talked about, at like 2.3 to 2.7K. Now we have that big triangle. I don't know if you have that on your chart, but basically, if you draw from the 13th of June on the weekly chart, like a trend line upwards, capped by that horizontal resistance, you have like a big ascending triangle
Well, listen,
that we're
I've just
kind.
redrawn the resistance trend line from November 2021 to those last more recent weekly highs, and this looks like a breakout and retest the way I've decided to draw
It
it.
does.
So
That's why I said.
you're
That's
welcome.
why I said I have the line, not the not the cluster. Because if you take the candle, we're still battling with it. If you take the line, we kind of broke out
Yeah,
and
so I
are
drew the cluster,
retesting
and
that.
then you said it was resistance. So in solidarity, I deleted it. So it
Oh,
looks like
love
just bullish retest, clear skies ahead.
love
You're
that.
welcome.
But yeah, I don't know. I don't really see a good reason to be too bearish on this thing.
Do you have an
And I
updated validation of some sort, like something where you're like, maybe the fucking weekly, and this
um
isn't the breakout?
No, not really.
No.
I think like if the problem is that I like in a normal market, if this was a normal market, I would actually see it pull back to 2.9K. And if
Okay.
I updated my invalidation, that would get hit and then I would be in the trade because I would still like it at 2.9K.
Yes.
Um, I think everyone would hate it at 2.9K, but I would still like it. Um, but like I said, given the market conditions, I don't think we're gonna get there. But I like just chart wise, that'd be the best chart we could get, I think. It's just I don't think it's going to happen. So no, I didn't update any invalidations. Basically, the
Based.
same since I got in. And technically speaking, I mean it's a weekly chart, and we just like I got in, and then we've just gone up 3 weeks or 4 weeks since.
Yeah. Yeah.
Like imagine you got in on an hourly trade and your target is like somewhere, and it's like 3 candles happen, and you're like,
Thanks for
like
playing.
literally 3 candles, and you're like, I need to update my invalidation, move my stop losses up. Like, it's not how it works, right?
Yeah.
It's just because it's a weekly chart, because the move is bigger, that people are like, I need to micromanage this more. And I get it, right? And you can look for invalidations on a lower time frame and then still trade the weekly, right? It's something that I used to do when I was more active, where I was like, okay, I like the weekly setup, but if the daily does X, I'm gonna get out of the way of like the short-term weakness and then buy into the bullish weekly setup again lower, right? Nowadays, I'm too lazy to do that. I'm just like, I'd rather have the position than play around with it. So yeah, I just like it. It's a good looking chart. Don't really see any issue with it, and it looks better, I gotta say, than most other altcoins. Like I've gone through my list, and a lot of the darlings of this cycle, especially. And
what have you got,
this shouldn't
Don?
be.
Which ones are you referring to?
I mean, Solana, like the WIF, like the big coins that everyone's talked about, right? Like those look much worse to me than ETH does. And this shouldn't really be too surprising to people that have gone through multiple cycles, because we've seen this before, right? With Link, where Link had an amazing early stage performance during 2020, 2021, if I remember correctly, or was it the cycle before? I think that was
the cycle before. I mean, it went up like all of the entire bear market, basically.
Yes. And then you had like it, and Link went up from 2019 till like 2021.
Isn't that insane to think about, by the way?
Yeah, completely crazy. And then you had the bull market, and Link actually didn't do anything.
Yeah.
And I think a lot of the coins that are like the darling trades are in a little bit of a similar position to Link, where I think a lot of people would agree that Link is quite fundamentally sound.
Yes.
I have no idea about it, but I have the Linkies in my comments always telling me how great it is, so I'll trust those.
I mean, it just runs DeFi on the Oracle side, I think.
Which is
worth a lot of money.
Yeah.
Like, imagine if DeFi were built on not Link. I mean, there's a reason it's the go-to, I think. Now, the partnership side is whatever, there's a lot of, it's like Swift and these are real partnerships. And they probably are more real than 99% of crypto partnerships, but I don't think that's really the point you want to emphasize. I think it's the fact that it's, for so long, has been the Lindy go-to reliable Oracle for like all of DeFi. And that's enough, like partnerships aside.
Yeah. So, I mean, it like fundamentally it was sound, and especially during those times, right? Like 2021, that was the DeFi cycle. So you would have expected it to outperform, but because everyone already positioned themselves, and to be fair, because I mean the Link Foundation was selling so much. I mean, everyone like every coin does, but like I remember like there was a lot of Link moving during those times. It just didn't. It didn't move. It didn't do much during the best part of the bull market. So everyone that was in Link was clowning on everyone that wasn't for 2 years. And then when the market got hot, Link just sat there and everything else moved. And I think that's kind of the danger that you have with early cycle movers, where they move so much and they price in so much of the future move that if you rotate into that one late, that you just sit there and the entire bull market passes you. And all of those people are not like the Link people that held from 2019. I don't think they were too upset about it, right? Like obviously they would have liked to see the market go up more, but if you're already up like 1000x, don't really care too much if other things outperform you, because at the end of the day, you outperformed everyone anyway. And I think that's kind of the danger that, like, when I look through the charts of this cycle, that some of these coins might run into.
Sort of
doesn't
too
have
much
to
too
happen.
soon.
Too much too soon. I think Solana is the best example. You look at that, that moved a lot, and it's been underperforming. Like the last few weeks have been the best, or some of the best price movements in a lot of the altcoins that we've had in years, right? Like XRP going up 5x, all the boomer coins basically moving a shitload. Solana had, on a relative basis, if you go Sol BTC, it's had 4 red weekly candles while all of that was happening.
Yeah, I've gone Sol ETH on the weekly. Now, obviously, this trend is absolutely insane overall.
Yeah.
But yeah, in terms of like a short snapshot, the last 4 weeks, Sol is cycle darling for good reason, and ETH is the go-to punching bag for being a piece of shit that never goes up, right?
Oh, and it still hasn't, right? Like that's the thing. Like Sol, like ETH still has underperformed like the majority of everything else.
Yes.
So like if you do Sol versus XRP, right? Sol USD versus XRP, for example, that reversed the entire bull market basically.
Yes.
Like the entire Solana bull market got reversed in a full month, which is fair, right? Like this is like the XRP people didn't have like anything for the longest time.
Yeah.
And then basically they got the move all at once, whereas the Sol people got the move just continuously, where like, and which is much easier, right? Like if you're just sitting in a coin that keeps going up, like that's cool. If you're an XRP holder, you would have to either time it or be just in the coin, taking the beating, right?
Yes.
So like I generally think like this is not something that should be feeling particularly unfair to anyone that's holding Sol, because you got the gains earlier and now everything else is kind of catching up to what Solana did. And I think that can happen to a lot of the coins that moved early in the cycle. And that doesn't make it basically, the only people that suffer from this are the ones that are rotating in late, right? The people that rotated in Sol like 3 months ago, or even like just this month, they're obviously going to be upset, right? Because if they bought anything else, they would have made money. They didn't. Now they're sitting there. Solana's underperforming. They're upset. But at that point, like, I mean, sucks to suck, right? Like if you rotate into something that's like objectively been hot for like a year or two, and then expect it to kind of continue doing what it's been doing, I think in crypto, that's just not necessarily how it works. And then you basically bought someone else's bags from them, then you cannot really expect the same kind of gains that you would otherwise get. But yeah, all this to say, like some coins look good, some coins don't. And it's honestly, it's just been like the coins that look good are mostly the coins that looked really shit for the longest time. So we had a little bit of narrative shift, and this is what I was talking about early in the episode, where I was like, there was like when the boomer coins started going, that was a narrative shift where we went from basically the casino type. And I think this is very obvious that we went from nihilistic, like we had the nihilistic gambling arc, and I think that's kind of gone now, or like not gone, but that whole narrative has weakened a lot because people are just like, hey, there's actually cool stuff. Like President Trump is buying Link. You have the DeFi stuff kind of, you have Hyperliquid coming back, outperforming. And I think that's just a narrative shift. And that's why the old narrative, which was the hyper gambling narrative, just has taken the backseat. And that can come back, right? Because at the end of the day, I mean, how useful is all of this stuff? And you can argue about this, but I think there's very little of use. It's all just promise of future use. So you can make the hyper gambling come back in a way, but I think for that you would have to disillusion a lot of the new folks that are coming in, which you would not necessarily want to do, right? So I think the hyper gambling narrative is more for like a pessimistic outlook on things, and I think we are kind of arrived in the everything is great in this market era. So I think that whole hyper gambling thing, I think, is gone. Doesn't mean the memes cannot go up. I think memes generally, like retail likes them. So if you can convince retail to buy them, they can go up. But the whole underlying like bid pressure that you had for the longest time, where it's just like you bought you had just basically like an easier time buying setups, like bullish setups on memes than on anything else. I think that's gone. Now you have to actually pick and choose wisely on that front. That's kind of my gut feeling, but I mean, I'm not the biggest meme trader. I like to trade my boomer coins.
Thing is, that's not terrible. That shift. Two things about it. First is I don't think it's terrible. If anything, it's probably a good thing on balance for like cycle longevity, because it's much easier to make an argument for, oh, this is like final leg, end times, nothing means anything, pure nihilism, the emperor has no clothes type of thing, when it's just memes and everything else is like pure dog shit and they dominate all of crypto. Versus when there's like a rotation to something else, or things that are purported to have value, or coins that have been around for a while getting rewarded, so to speak. There's at least something there in terms of it's less end of the cycle behavior than just pure hyper gambling, just dominating the entire discourse. That's a bit of a mixed point. The second one, which I think is worth noting, is that when we were making arguments about, well, meme coins are just hot altcoins and hot altcoins shift, you remember the disbelief with which that argument was being made to some extent, because the prevailing sentiment at the time was that, like, why would you ever buy any of these altcoins or any of these VC coins, or just
the VC coin thing, that's so funny.
and like people just wrote them off completely as like there is no reason ever to buy any of these coins, and memes will just like outperform because they're new and they sort of capture the mimetic nature of financial markets and all this type of stuff. And like even if it's like a 4-week period and memes go back to outperforming, like clearly that premise is less true than it was before. And I think it lends support to the idea that no specific brand or sector of altcoins is special, and it's not exempt from the rules of attention drying up and capital rotating and all the other things that have taken place since 2013, 2017, 2021, and so forth. Like the exception does not make the rule, and there is still no exception. That's the rule is the rule is still very much intact. I will say that from an altcoin perspective, it does seem that there's some kind of narrative fragmentation still going on. Like there's the whole President Trump link, ETH is strong and DeFi getting a corresponding bid, run back 2021 thing going on. The AI agent thing is still going on. There's still some passive bid in meme coins. It's a bit harder, but it's still there. And boomer coins in certain pockets are still outperforming, especially bearing in mind their market cap. So it's a bit of a weird spot right now. I don't know if you've come to a similar finding going through your watch list, but there isn't like when memes are going up, it was like the most blatant barbell portfolio in the world, right? Like ETH is a piece of shit, it won't go up. Lol, DeFi, and it's just like whiff every single week. And even pre-Dogecoins, like whiff, Pepe, anything else listed on a centralized exchange, bunch of stuff not listed on a centralized exchange, Popcat setting new all-time highs every day, so on and so forth. And that seems less apparent now. I think there's like if you were to go on, as I have here, Velo's large cap biggest changes over the past week, it's like Aave, Link, and then it's Pepe, then it's Sui, then it's HBAR, Boomercoin, DeFi, Memecoin, XRP.
I would say Pepe went up, or like is going up, because it's on ETH. So like it's kind of like it's the meme coin of ETH, which
it's valid.
Which basically takes it, like I don't think Pepe is necessarily going up because it's a meme coin. I think it's because it's the largest meme coin on ETH. Or like at least the most.
Do you think a lot of this is, do you think the narrative is simpler? It's like ETH, and that drags together ETH meme coins plus DeFi, and then boomer coins kind of just follow up strength.
Yes.
Okay.
I think that's kind of the narrative right now. Like it's been ETH.
But on Baby Doge is up the most this week, 93%. So clearly you're full of shit.
There's obviously some exceptions, and I think this is actually bearish ETH to an extent.
What is
that? And this is the problem with ETH, and it's the problem why, like, one of the big reasons why it's not gone up as much is because the moment ETH shows a little bit of life, people go and buy Lido, Aave,
Uni, Sushi.
Yeah. I can keep, like, there's and I mean everyone knows these coins too, right? It's not like I didn't even look at a list, and I'm a fucking boomer. I don't know any coins, right? I can make you a list of like 20 coins that have like basically they drag ETH because people want to have ETH exposure, right? They're like, ETH is looking good. Let me buy something else on ETH. And I think that's basically the reason why ETH's been such a piece of shit, even when it's bullish. It's because people just don't buy ETH. They buy the riskier ETH, right? They skip ETH and go into like the riskier part of it, which makes those much more risky, because if ETH doesn't go up enough, they just nuke, right? And if you go, for example, you look at Lido, right? It's one that I found interesting price action wise. Look at how much that dumped on that leverage wipe. Like that's down 35% from top to
That's
bottom.
crazy.
And it's basically because people bought it because they didn't want to buy ETH because they're like, I mean, what's ETH going to do? Like a 2x?
Yeah.
And so they bought Lido because they were like, this is going to go up. And then the moment ETH has a little bit of a pullback, like everything goes to shit. And I think that's like a big drag on a lot of these coins. It's something that like when you build these ecosystem coins and like you make the ecosystem a little bit more vibrant, it's bullish initially, but then once it's all established, right, it soaks up liquidity so much that you actually have troubles getting a proper bid on the actual asset that needs to go up to support all of this ecosystem.
I think that applies to Sol as well.
It's pretty much exactly the same with Sol. Like it's basically when you start with a coin, right? Like you get a coin and you start building the ecosystem, then that's bullish because I mean the coin like has usage and all that stuff. But once you've actually established it, and I think Solana has it at this point as well, it becomes a drag. So on the upside, this is why I say like Pump Fund was so bullish Solana. It's one of the big reasons why Solana went up so much. But now like that, you have a huge Pump Fund ecosystem, and they keep taking like they make Solana and then they sell it. Like it starts becoming a drag, right? Because basically, like people that are gambling on the whole Pump Fund side of things, they're losing Solana. They're giving it to the Pump Fund guys, which just are making out like bandits, cashing out like a shitload of Sol every other week. And it becomes a drag. So at the start, it's good, and then it becomes a drag, and it's basically why I think one of the reasons why Solana is struggling a little bit now, because the whole meme coin sector is having troubles, at least not pumping as hard as it used to. So you have a little bit of like a contraction there, and then that means money is flowing out, but you still have like all of these fees, and if not more people come into the pump fund casino, you just basically have like an existing user base that are just trading back and forth. The space gets smaller and smaller, but the fees are still getting paid because that space is still quite large, right? Like people are still doing a shitload on Solana, still doing a shitload on Pump Fund, but they need new money to come in that buy Solana to buy like Pump Fund coins or just generally like interact with the ecosystem. And then it becomes a drag, which it is right now, which is why I think we've had the shitty price action on that front. So you basically need a bunch of new people coming in, and that's what happens with fresh coins. When you have a bunch of users coming in enjoying the ecosystem, and then once the coins are older, you start getting these drag effects. That's kind of how I look at it. I'm not an expert, but just from a trading side of things, that's kind of like how I understand the market. And I think that's one of the reasons why like ETH's been underperforming as well, just because you basically need so much money to come in to pump all of these. The good thing with ETH is that it has the ETF. So basically, you are starting to see like and this is like the ETF like the ETF flows on ETH have been really good. You're starting to see that native bid on ETH, which can then support the ecosystem bid that we degens all do, because we're like, fucking, why would I buy ETH if it cannot go 10x, right? So basically, it's the same effect that we've had on Bitcoin with Saylor, just with the ETF now, where you can pump ETH with the ETF, and then people pump the ecosystem, which makes that whole thing kind of like steal the ecosystems from like other coins, right? And then you can start the flywheel again. It's always a flywheel in crypto, right? And it always ends poorly at some point. Like once the flywheel stops, which it always does, you just get like a bunch of very shitty price action. And I think that's the chance ETH has right now, where you get the ETF bid, and then like a bunch of people play with the ecosystem with DeFi again. DeFi gets bigger, DeFi pumps, attracting more people, and then you have a bunch of memes on ETH, like Pepe, for example, doing well, and that leads to more memes being created on ETH, stealing bid from Solana, for example, again. And I think the opposite happened with Solana on the way up, right? Where it was kind of like Solana was hijacking the whole ETH ecosystem. And now ETH can turn it around if done right, but I mean, we'll see how it goes. But just generally, like, that's how I understand how it works. I don't know if that was at all interesting or
it is.
correct.
And
Maybe
think
I
it's
understand.
reasonable. I think we
Right.
see those effects play out. It's also why BTC is so bullish, because there is no fucking ecosystem. Like, if you want BTC, you buy BTC, you know?
Yes, I think it's like legit that simple. Like the moment you start, like it starts being confusing and you don't know exactly what to buy. If you like something,
Yes.
it becomes a little bit bearish.
Isn't it interesting how that works on a macro and a micro level? Like, on a micro level, it's basically how you described it, where you like the underlying asset, but you want the leveraged beta juiced returns, whatever. So you just go out to buy end of the risk curve dog shit on that ecosystem, and then you get wiped out. That's kind of the micro effect. And on the macro effect, we do that with crypto as a whole. Like, you're like, oh well, BTC is going up, that's bullish for crypto, let me just go buy the most illiquid altcoins because I want the BTC returns just on steroids, basically.
I mean, I think that's why the maxis was so upset the past cycles, because we didn't have an ETF, we didn't have a Saylor, right? So basically what happened is that the moves got smaller and smaller. And I think this is like legit, like go through the time frames, like go through the cycles and through years. And I think that a big part of it is basically because all of that money that gets into crypto has so many places to go now, right? And then people are just like, why would I buy Bitcoin if I can buy these? And that's why like the maxis were just sitting there being like, fuck this. Like every single cycle, we get less and less of the pie because a bunch of grifters basically spin up a bunch of like shitty blockchains that don't do anything but attract like retail, and they don't buy Bitcoin, they buy this and that. It's quite funny to see. And at the end of the day, I think as long as people get into crypto, there's a good chance that they at some point turn to Bitcoin, just based on the fact that anything else that you hold is probably gonna go and lose value. So people are just like, I fell for this once, but now I'm like I have seen the light.
Thing is, that takes like one whole cycle minimum to
That
play
takes
out,
a
right?
long time.
Because what happens is you're allocated, even if you have like BTC and shitcoins, and then you enter at the cycle top and everything nukes, you're like, well, my shitcoin went to near zero, but BTC also corrected so much that, like, what's the fucking difference? But then the difference is that BTC then goes up and sets a new all-time high, whereas the shitcoin just like disappears into obscurity. And I think that's when it clicks, and when you realize that there is a material difference. It's kind of the ability to survive a cycle-wide drawdown and what happens afterwards. For BTC and ETH, well, close to ETH, but BTC certainly, like, it just sets a new all-time high. It's Lindy. It's like what it does. It's its thing up and to the right, whereas your altcoins won't do the same thing. That's what I find probably one of the most frustrating, dishonest, specious arguments is like, well, there is no safe haven because like when stuff goes down, it like all goes down at the same time. So you might as well like never trade BTC and only trade altcoins. I think that is plausibly true on like a micro, low to medium time frame trading level, but like on a fundamental looking at crypto level, it seems like completely wrong and a just terrible way to view things. That can't be reconciled with reality. But, but again, I think you can't also teach that to someone unless they go through it, I think.
Yeah. I mean, people also just really don't understand percentages. Like they're like, Bitcoin goes down 80%, my altcoin went down 95%. Like that's not that much worse. But it's so much worse. It's so much worse. And it's like, also like, then exactly as you said, the recovery is different.
Yes.
Right? Even if the altcoin makes it another cycle, which sometimes happens, right? Like you sometimes have like an altcoin that goes up one cycle, and then the next cycle it still goes up, but XRP. A little bit less. I mean, XRP is one of the ones that has actually like, it's really funny. Like, I mean, I hate XRP, just for the record, right? Like I really dislike, I think it's the antithesis of crypto in a way. But if you go on XRP BTC on the monthly, this is actually one of the few coins that has just basically, I mean, just even if you just look at it from a glance, like that just held even with Bitcoin cycle to cycle. Like this is not outperforming Bitcoin, but it's also not really being outperformed by Bitcoin when you look at it. And that obviously, I mean, XRP is probably going to go to zero at some point, but just generally, like that's one of the stronger coins, I think, especially given its age, right? Like if you look at any coin from 2014, I mean, there's a few, if you look at Litecoin, BTC, that's a tragedy in comparison. If you look at, I mean, like anything besides maybe ETH, because ETH's been around a while, and that's actually even better than XRP, where it's like it's setting higher lows every single cycle. So far, at least, we'll see if that continues. But yeah, that's quite. I find that quite funny to observe, where it's like it's the most shit talk crypto, I think. But it's actually been not that bad to the holders. It's just been like agonizing to watch.
It's also one of the most cultish ones, so Murad was right. That's
actually,
the real takeaway.
I mean, XRP is a little bit of a meme coin, I think. Like that.
I mean, you have actual meme coins on XRP, so.
Yeah. I mean, I'm playing around with it, but just generally, like I find that quite funny. It's a meme coin, but in a different way, because basically it's a cult coin more than a meme coin.
I mean, you remember when Cardano went up like 10 zillion% in 2021, and basically crypto Twitter had zero exposure because of like how Cardano is perceived.
Yeah, I mean, fuck Cardano. I'm the same. Like I'm pretty sure I didn't really have it.
Maybe we're missing something with Cardano, Don. Have you ever considered that, in all our ignorance and inability to read Haskell and stuff? There's like a budding ecosystem, like a Narnia of crypto, and we're just completely oblivious.
No, I mean, just listen to Charles, and you're gonna be like, even if this is the greatest thing on earth, like,
oh man,
fuck no. And people, 100% people are gonna be in the comments being like, you are so unfair to Charles. Like every time I make a comment, but I could not like that person less. Like it's impossible.
I haven't actually listened to him. Am I missing out on something?
No.
Okay, I'll take your word for it. I won't do my own research.
Oh, people are gonna be so upset at me now.
Classic.
Like they're gonna be like, Don's gatekeeping Charles.
Don is gatekeeping Cardano. I mean, you were also picking on Link as your shitty altcoin example, and look at the middle finger candle that it's printed as a result.
Oh, I mean, I was fair enough. No, I'm with Charles. I think you either love him and you think he's the biggest genius on the planet, or you just think like he's the biggest like grifter / just like someone that tries really hard to look cool but really isn't. I think there's no in between with him.
No radical centrism on this one, Don. That's very rare for you.
Yeah, no, I just don't like the guy. I also don't like the XRP guys, to be fair, and I hold a bunch of it.
That's true. I think that always comes up in the comments, by the way. It's like Don is basically a moral hypocrite, and I thumbs up those comments from like 8 of my accounts.
It's great. I mean, people just don't understand that you can have an opinion and trade. Like, you know, like there's different hats you can put on, right? Yes. Like there's an investor hat, and within investor hat, I think you really should like the people that are doing whatever, like the thing that you invested in. I mean, it's really hard to say because like the Bitcoin people, like the Bitcoin devs, holy shit, don't read the Bitcoin devs comments about anything, like, or at least some, because they're gonna wanna make you sell fucking Bitcoin. Like it's the worst. Like,
but they're not the public facing figures, right? It's people like Saylor and Larry
So you can just be like, you pretend they don't exist, and then you're more bullish. It's good.
Correct.
And then like I look at ETH and I'm like, I actually like Vitalik from like what I've seen from him and the way he kind of talks and acts. I think he's like as much shit as he's gotten, right? Like I think like he's a positive force in crypto, by like one of the most positive forces in crypto. Like in stark contrast to a lot of the grifting that's going on.
Yeah, but then you look at Bankless.
And then you look at Bankless and you want to sell all your ETH. So yeah, but just generally like, if you have the investing hat on, like that's something that you should care about at least a little bit. Like obviously, like the face of the company of sorts is important, and how they conduct themselves publicly. That's one of the reasons why, like investment-wise, Solana is really not interesting to me. I think the Solana discourse is really shit in comparison to the ETH discourse. But there's also a trader hat where I can say like, hey, Solana looks really good, and Solana is where the action's at, and I can trade Solana even if I don't like the people behind it. Or I mean, Solana is not even something I particularly dislike, but XRP, for example, I dislike, and I can still see that that's gonna be very likely the narrative of the cycle, right? And then I'm obviously gonna trade that.
Just where was that trader hat when meme coins were popping left, right, and center.
With meme coins, the problem that I have with meme coins is that like me buying a meme coin and publicly promoting it would actually change the trade results.
Fine.
Which this is just my fundamental problem with the meme coin trading is that it's low cap. Like you trade meme coins, and these are like in the low millions of market cap.
You're not trading meme coins at that point.
You're not really trading it. Yeah, you're promoting something. It goes up because you're promoting it, and then like there's no losing. I don't like a game that's rigged, right? Like I mean all of these are somewhat rigged, right? Like every market is somewhat rigged, but those are like if I'm doing the rigging, I just don't like it.
Yeah.
Like it's disgusting to me. I also just don't want to go to jail. Just generally,
sure.
I don't need it, right? Like I don't need to.
I don't know, man. 3 meals a day, good sleep schedule.
Yeah, I mean, like that's kind of like like how I look at it. I just don't agree with the way the meme coins like were done. I have never had a problem trading Doge, right? Because I cannot influence that.
I mean,
market.
Elon can't at this point, so.
Yes, and I had a problem with Elon doing it with Doge, right? Like I think
I'm sure he cares a lot.
Yeah, my thinking and my like what I say, I think is very like straightforward, and it's actually like there is some reason to it, even if you might not believe me. But people just see it as hating meme coins, but it's not necessarily true. I just hate the space that the meme coins have created and the way they are being traded.
Well, it's more the meme coin KOL industrial complex that I think is worth critiquing more so than the existence of meme coins themselves. Because look, if someone came to you when meme coins just started coming out and saying, look, this is like a reactionary pendulum swing response to insider laden VC coins, and these are like fun, organic, low friction. We built a super attractive and easy to use moat via pump fund to trade this stuff. What do you think? I imagine you'd probably say, well, it's, I don't know, like they're probably going to go to zero and stuff, and the way these games are played, so on and so forth. But in concept and philosophically, it's a cool thing, right?
Yeah.
Like that seems like that's my position at least. And like, yeah, that makes sense. It's coherent. It's cool. Outcomes aside, in that form, there's something interesting there, especially if we get cool products out of it with people that are actually use crypto tech for a change, right? But then if you were to compare that to when the trenches got like really bad and that, you know, meme coin KOL industrial complex was at its peak, I think we're talking about two completely different things. The problem is they both were described using the same language, i.e. meme coins, even though they couldn't be any more different from each other. So I think that's where a lot got lost in translation. Like meme coins as a principle, you know, that reactionary response and stuff, cool. But then when it's just like KOL, USD extraction, rigged cabal shit, that's A, materially different, B, just a lot worse than what it was supposed to be. And it took like zero time. That's kind of the sad part, right? Like that kind of organic community middle finger to the VCs. As soon as people started making money, they just started playing VC games once again, using the same tricks but worse. Now that they were the ones in positions of power,
we just replaced the VCs with KOLs.
Yes.
Like literally, like immediately also. And then like people were celebrating the worst offenders too.
Oh my god, yeah. The main characters just being
it's just I just, and this I hate, and these people I hate, right? Like if you see, like for me at least, like on a personal level, like if I see that like I'm, and there's really inherently there's no value on this, right? Like because if people are really trying to make something, right, that is cool, that might be something in the future, like go ahead, promote it, whatever. I have no problem with it, right? But if you're basically promoting something inherently valueless to an audience that you bought so you can sell it higher, you're always going to have to sell it at some point. It's not like any of these KOLs are going to keep that stuff. They're always going to sell for their personal gain, right? And this is just like, for me, it's just like, if you have to do this to push it to make money, it's just like, on a personal level, I just fucking hate it. I also, in 2017, the stuff that McAfee did, I fucking hated it. Like the coin of the day, I don't know if you remember. I mean, you do. Like McAfee just being there.
What a legend. R.I.P.
Yeah, I mean, he did basically, he was just like, okay, I'm going to pick one coin a day and I'm going to pump it. And I fucking hated it. Like I dislike these kind of games a lot, because it's just like it's extractive generally, and it's not doing anyone any favors. It's just like you make a bunch of money, the people that are early make a bunch of money, and the people that are late just gonna get completely wrecked. I'm not biggest fan of that, and this is just my problem with that entire sector, because that's sadly what it's come to. It's not, like you said, a middle finger to anyone. It's not about the culture. It's about, like, for 99% of these, it's about making money, obviously. Even the big like supporters of coins are talking about, oh, this is like the only thing that they really talk about is this is gonna go up so much and we're gonna be so rich. Back in the day when I was trading Dogecoin, in like when I first bought Dogecoin in 2000, like whatever, 14, 15, I didn't necessarily, like, I was like, obviously, like, hey, this would be cool if I make money with this. But I was just like, this is cool because it's cool. Like, they did cool projects. Was just funny, right? Like, this was before meme coins were a thing even. And I was like, it's just fun because it's like something novel. It's like just having fun, basically. And it went from that to, and I think the Doge community also shifted from basically that to just being a bunch of losers that just hope that Elon pumps the price for them. This is my problem with the meme coin community, that they kind of like take these grifters and put them on a pedestal. If that wasn't happening and people were just like doing their thing, I'd be acting very different towards
I mean, there
it.
was a nice like 2.5 week period where that was the case before it got
Yeah.
professionally extractive, you know?
Yep.
Well,
Not long enough, but it is what it is
Don,
at
that's
the end
all
of the
I've
day.
got personally.
Yeah.
I don't know if you want to follow up on anything, or if you want to enter and begin your 5-minute pre-written segment on why people should join and read my Telegram channel.
Yeah. I mean, they should, so you stop talking about it.
Yeah, perfect. There's a real crypto use case for you. I think TLDR is, if you're going to play the rotation game, know why you're playing it. The valid reasons tend to be if you're very actively trading, frequently rebalancing, and are trading sectors where the sector itself goes in and out of relevance, and also the coins within the sector itself go in and out of relevance. That, by definition, demands more rebalancing and more active rotation. If you're not playing that game and you're playing a safer, more conservative, lower frequency game with BTC, ETH, Sol, high cap stuff over a larger time frame, then rotation is just like a shiny object that will eat your P&L and distract you. So it's a case of identifying what your portfolio looks like and the demands of that portfolio in order to keep the exposures that you want to have. As far as the BTC side goes, the prevailing meta still very much seems to be ETF plus Saylor, fuck your TA bailout type of approach. What that means for altcoin trading is that it's still attractive. Just be aware that the leverage on these gets added very aggressively and very quickly, and there is absolutely no resilience on any dips, and all those positions and participants are categorically paper-handed. And what that means in practical terms is that you don't want to have crazy leverage on these, because even consolidations in BTC can nuke it 10-20%, in which case you're cooked. But what it also means is on those cooked days, as long as the first part of the price insensitive buyers is true, then you can quite confidently target mean reversion on those altcoins, because the whole market gets lifted by that same correlation, and that will keep working until it doesn't. What do you think?
Yeah, basically, you will only go wrong once, but that's going to be catastrophic. But you're going to have made the most of it before that's happened.
It's just like any other trend, right? Like, you have an uptrending thing, you buy every fucking 5-minute EMA retest, it prints 8 times, and on the 9th time you eat like a huge chunk of shit. It's kind of the cost of doing business, and it should even out quite positively for you as long as you don't get completely wiped out on that one time you're wrong.
Yeah, it's the only thing that you can really fuck up is not taking chips off the table, I think.
Yes.
Like, if you keep on compounding, at some point you're gonna get wrecked, and that's something that really shouldn't happen. I think, like, the more frothy the market gets, the less leverage you should be using,
Yes.
not the opposite. So basically, like, when we're trading lower, like, if you slammed it, fair enough. But then, like, the higher your net worth goes, the more you reduce leverage. And this also applies to people that don't use any leverage at all, but trade like very risky stuff. You should be consolidating into non-risky stuff as you go along. in my opinion anyway. Like
Yeah, like more
there's
liquid stuff at the very least,
yes,
right?
exactly. Like basically like you just move at least parts of the profits into more liquid stuff if you don't want to move it out of the market entirely.
I think that's
That's
very
like
fair.
delevering. Like that's delevering even if you don't trade leverage.
Yes.
Because we all know that like the further out you go on the risk curve, it's basically like trading your coin leverage. This is what I said with the ETH stuff earlier, where it's like if you make a bunch of money with those like with Lido, with Aave, with whatever, if you consolidate that into ETH, the gains are not gonna disappear as they would if the market goes down in those coins. You're basically reducing leverage as you go along.
Effectively reducing your leverage, exactly.
Yes.
I think in general, like an appropriate analogy is to think of all of this stuff that you just mentioned, like you would a well-structured breakout trade. Like you're not adding more, and unless your name is Michael Saylor, you're not adding more and maximal size to your breakout trade. Like the further the breakout goes, in general, you want to be have your most size as the breakout is taking place, or at the point of breakout, or kind of the event itself immediately post breakout. But as it starts running and continues running, you want to have less exposure, not more. The bulk of it should be built early on, and it's kind of your exposure is inverse to price. Essentially, as it starts getting really extended, really crazy, etc., that's the time you're consolidating, reducing, deleveraging, trailing, doing all that sort of stuff instead of adding. And there are an infinite number of horror stories, especially from 2021, where you could use any altcoin that you had as collateral for your longs, and so people would just be long BTC, ETH, and a shit ton of altcoins. And then they would use their unrealized P&L, including the collateral value of those altcoins, to just long their longs. And then they long their longs and they long their longs. And the one time it goes wrong, all of your progress gets wiped out and you die, basically. That was 2021. We had our own version in 2017 when we were trading inverse BTC margined futures on BitMEX. And lo and behold, humans didn't really change that much in 4 years. It was the same behavior, right? You were long your longs and using your long collateral for your longs. And again, it kept working. And the one time it doesn't, it's an existential fucking wipeout. So I don't think that market effect is going to disappear anytime soon. Just don't do it.
Yeah, I mean, like the thing is, like, and this is gonna be like the funniest thing is like this is like if you long your longs, it's great until it stops working, right? Like basically, you're gonna do it 5 times, and you're gonna be like, this is the greatest fucking thing on the planet, right? Like, this is free money glitches, but it's like basically you're sitting at the roulette table and you win 5 times in a row, and every single time you put all of your money back into the roulette and like keep betting it on black or whatever, and you're like, it worked like the last 4 or 5 times, has to work now, and then at some point, no matter how lucky you are, you're gonna lose it all, right? Whereas if you take some chips off the table, if you lose, like if you win 10 times on the roulette table and you've taken a bunch off, if you then lose at some point, you're at least not all the way back to zero. And I think that's just very straightforward, very like, I mean, it's just common like knowledge that this is what you should be doing at some point, at least. You can go aggressive if you think the market is going to teleport up, like be my guest, right? But just make sure that you're not going to do it until it all ends, right? Like you have to take some sort of exit at some point, at least from the leverage side of things. You can obviously keep Bitcoin cycle to cycle, and that's been completely fine. And I think just generally also like once we have the first, like I think this cycle is going to end with quite the crash just because people are getting basically brainwashed into doing what we're talking about, into longing their longs by Saylor, by the ETF. But I also think that basically that nuke is probably going to be the last time you're going to see that kind of nuke, just because at that point, then the market is so established in the TradFi world that you're not going to see it as aggressive anymore. So I think that's going to be basically, if you got liquidated during that, it might be the last time you get a liquidation event that you can take advantage of that size, which would just kind of suck, right? So you want to be prepared to take advantage of that down the road by just not losing it all. I think it's very, very simple thing to ask of yourself, to just not put everything at risk at all times. But for some reason, every single cycle, like 90% of people do it still. And it just doesn't end well. Even if it goes well at the start, it doesn't end well at the end.
Yeah. I think you can listen, even if you ignore the whole price insensitive until it isn't, you ignore the whole, add most of your size in proximity to the breakout, you ignore the whole consolidate and rotate to liquid stuff as things progress. Like, even if you disregard all of that, I think the one thing that you categorically shouldn't disregard, no matter your circumstances, is to always remove the existential risk in your positioning, portfolio, whatever it may be. By existential, I mean the stuff that will get you wiped out to near zero or close to zero. And if you need to ask whether you have that risk in the first place, then I think there's some homework to be done, and that shit can creep up on you like faster than you think as well. Yeah. Like you eat like a big drawdown on the first nuke, and then you buy the dip, and then it goes wrong again. You can lose half your money in like 2 days, no exaggeration. Like within a week. Like this stuff. This stuff can get very crazy when it's volatile. And again, to plug myself as usual, there's a write-up in my Telegram on sort of discounting your peak net worth, basically. You're not going to sell the top. The first dip after the top, you're probably going to buy and then get nuked out of that one. You're going to overtrade the chop, and then by the time you realize that you're fucked and start selling, the liquidity is a fraction of what it was. There are so many things that like go wrong once things turn around if you're aggressively positioned, that it's worth kind of being aware of what your portfolio looks like in a worst case scenario. And I still firmly believe that more money is lost in terrible trading after the top than like at the top itself, whatever form that takes. So yeah. But anyway, stuff looks decent, like
we're not doomer talking here.
It's not doomer talking. Just Saylor keep buying and everything will be fine.
Yeah, I mean, just generally
but like unironically.
Especially especially when like if we head into a parabolic ascent, like just know that most of the parabola is probably gonna be retraced. You know what I mean? Like this, we've seen this before. The moment it gets parabolic, like aggressively parabolic, there's gonna be like something down the road. But also like Bitcoin went parabolic in 2017 from basically 700 to 20,000. So like if you sold 700 just because you were like, oh, it's going parabolic. Don and Cred talked about this.
Yeah.
And I need to sell everything. This is not what we're saying. We're just saying make sure that you level up in real life as well as in crypto, right? Like if your portfolio does 10x and you're still living on a inflated mattress, maybe buy a bed.
Based.
I think that's just like that's just makes sense, but people don't do it because they're like every dollar that I pull out of the market could be $5 down the road. But it's like at some point it's like you're just being greedy.
You still have zero real dollars. Like
yeah.
And it's like, why should I buy a mattress? I can buy a mattress company if this hits my second take profit. It's like, okay.
And if like 10% can significantly change your life, those 10%, like that's easy to get back in the market, right? And the comfort of knowing that you're not completely wrecked if the market disappears is going to make you trade infinitely better than those 10% that you lost, right? Yeah. Like 10%, buying your ease of mind with 10-20% of your portfolio is so worth it.
Best trade.
In comparison to just sitting there wondering every time it dips, right? Because that's the thing. Like you don't wonder about this while it goes up, but the moment it dips, you're like, ah, shit. What do I actually do if this goes to zero? And then you do dumb shit. Whereas if you like made sure that you're fine no matter what, you're like, oh, it dipped. I'm fine with it. Maybe I can like put up some leverage again at some point because I mean, I'll be fine anyway. In the other case, you're like, oh shit, my life's over, my life's ruined. And then you do dumb shit. So you should always hedge against you being stupid because let's be real, all of us are really fucking stupid.
Yeah, especially us too, Don.
Yes, I think that's what we should end up on.
Perfect. That's all from us. Before you click off, please leave a like on this video. Subscribe to the channel if you haven't already. Thank you as always to Woo for supporting the show. Their links are available in the description below. Hope you all have a wonderful weekend and we'll see you next week.
Bye-bye.